What's going on, guys? Welcome back to another video here. Again, second little video here that we have doing these daily market recap videos. So again, if you guys do enjoy these, let's get this YouTube algorithm charged back up again. Make sure you guys hit that like button down below. Drop a comment. Let's get through it here because we have a lot to talk about, especially after yesterday's video, going along with the thesis that we've had for the last couple of weeks, really looking towards the end of the year. Now, before we get into everything, I want to give a little shout out here to a couple of some of my trading students, Jackie and Rogue, absolutely crushing this Nike trade that we've had for this week. I mean, I was up over 350% on it, but those of you guys that took those shorter dated contracts, congratulations, everybody. You guys should all know this by now, but the Discord is going to be released to all of you guys at the end of the month here, really end of August, beginning of September. But that special deal, the 20% off to all the education that I'm currently offering, the Day Trading Mastery course, the Swing Kings course, the watch list of stocks that are about to explode before they do. It is the best trading education that exists on the market right now. If you guys do take advantage of that, you are going to be able to get access to the Discord for free, but that sale obviously is going to end once we head out and release the Discord here. But let's get right into it. Talk about this little market short squeeze that we've been witnessing. What I've been talking about a lot, guys, especially in this sell-off that we've seen, the first thing is that we need to start to see the market closing at highs. And in this area here, you can see that we had some buyers starting to push back to the upside here, but we're met with very, very aggressive sellers pushing price back to the downside. Then we started to see price move back up here. Now, I want you guys to think about exactly what has been happening when we saw this sell-off. Now, there's two main things. One, the first round of the unwinding of the yen carry trade, which we talked a little bit about yesterday. But the other thing that a lot of people were missing, and to me, honestly, it wasn't the biggest catalyst and the biggest piece of news, but on that last non-farm payroll number or data release, the unemployment number came in at about 4.3%. It was much higher than market expectations, and the Fed's overall expectation from their last summary of economic projections for what we would expect to see by the end of 2024. So we started to see those recession fears moving back to the upside. This coincided with yields moving down as traders started to increase their bets and expectations that the Fed was going to be cutting by a lot more than previously expected, and that pendulum was swinging back in that direction. Now, in yesterday's video, we talked about how that's very dangerous because of those two different paths that we could go on where those traders could be correct, or if they are wrong, it really ends up in the same outcome. Now, with that same outcome, what did we see? Wild aggressive selling here. Now, when these large institutional players, guys, are going to be shifting their thesis, it's going to be very difficult for them to kind of switch on a dime because they're looking at sequences of data and multiple different data points and prints over a period of time in order to build their thesis. So when that starts to change right around this area here, and we see that aggressive selling and these bounces back to the upside as the yen situation starts to kind of come back to a normal area, and we also see the Bank of Japan starting to say, well, we're not going to raise interest rates anymore. And then we start to see the data points that we've been seeing. A lot of people are going to be missing this move to the upside. Now, again, with these two candles right here, they are in what I like to call short every pop mode. When we start to shift back to the upside, guys, there is a lot of people out in the market that are missing this rally that still think and have not changed their thesis yet that this market still is going to drop very, very significantly. A lot of people were drawing this little trend line from here to here up to yesterday's high and thinking that this was going to reject. Now, we're going to talk about the data from today because it is very important, and honestly, it is exactly what we needed to see in order to give me a little bit more confidence in the market here. Now, thinking about this data, when we move over here and start thinking about this, look what we have. We have initial jobless claims, which is showing you the amount of people that are filing for unemployment benefits for the first time. So we had the expectation here at 234,000, and the number came out at 227,000. Okay, so less people are filing for unemployment benefits than previously thought. In continuing claims, which is effectively looking at this jobless claims number and saying, okay, from the time period that these people have first filed their claims, how long are they then staying on those unemployment benefits? That's what continuing claims are showing you. And that also came in lower than expectations. So what does that tell you about the unemployment rate? Well, it gives a little bit of a hint that the unemployment rate on the next NFP report, again, one data point is not going to be the end all be all, but we did see this trend last week as well, where these numbers were coming in lower than expected. We would then expect to see lower unemployment. So that 4.3% number might start to move back to the downside, and that's going to stifle some of those recession fears that were out in the market. And when we take a look at this other data point, US retail sales here, we actually are looking at a little bit of growth coming back in, which is very interesting. So when we look at this number here, the expectation for US retail sales was an increase of 0.3%, and it came in at 1%. Now, the most important thing that I want you guys to understand about retail sales here is, again, this little highlighted section. Retail sales report is going to help analysts and investors gauge the health of the economy and any inflationary pressures that may exist. Now, with the lower CPI print and PPI print from earlier this week, and then you also see retail sales ticking up, it's showing you that the economy is almost in a little bit of a better spot, and it's going to make it a lot more difficult for the Fed to be cutting interest rates as aggressively as previously thought. And when we come over to this chart here of the 10-year government bond yields for the United States, we are seeing these yields starting to move back to the upside as investors are starting to either sell bonds or look at these rate cut expectations and say, well, we were predicting that we were expecting to see some pretty significant rate cuts. We talked about it yesterday, that 1% by the end of the year. Which would entail at one of the next three meetings, which are the only ones left in the year, that we are going to see a 50 basis point rate cut, which obviously, in my opinion, as we've talked about a lot on the daily live streams, that's too much. The overall environment that we're in right now doesn't really show that the overall economy needs that right now. So what happens? Well, Fed swaps start pricing in less than 100 basis points of easing in 2024. Futures traders raise the odds of the Fed easing 25 basis points in September to 74.5%. Now, again, you might think, you're starting to see these rate cut expectations tick back up. But remember, a lot of people were thinking that that supposed 50 basis point rate cut was going to be coming in September. So if the odds are increasing for a 25 basis point cut in September instead of 50, well, that is going to be a good thing to kind of get us away from that danger thesis that we've been talking about here. So again, you see that right above here. The Fed funds futures show the odds of a 50 basis point cut in September falling to about 23.5%. Now, when we're looking at everything as a whole, guys, I'll tell you right now, those of you guys that have taken advantage of the education that I offer you, I think the Swing Kings watch list for this weekend is going to be absolutely nuts. There's so much opportunity out there. You guys saw the Nike trade. There are a lot of different tickers setting up really well. The one thing that I want everybody to be aware of is, even though a lot of these shorts are getting squeezed out from shorting down in these levels here, expecting the market to continue to the downside, we have to be aware of a potential retest coming in. We were talking about this in the live stream. I think it would be very healthy for the market to chop around for a little bit and start to move back to the downside, meeting this 10 EMA, and then seeing where we want to go next. If, again, in the event that people are still trying to aggressively short these rallies here, which it doesn't appear like they're doing so, but we could head a little bit higher. Now, I don't want to sit here and say maybe it goes up, maybe it goes down. In general, right now, we have shifted out of this little downtrend. But what I do want to see in an ideal scenario is a little bit of consolidation before we end up making that move higher with some of those other potential data points that we could see. Another CPI, PCE data, more initial and continuing claims numbers showing that that unemployment spike might have just been a little bit of a fluke. Because again, now that we've seen some of these rate cut expectations get reeled back in, it doesn't mean that we're out of the woods yet. This pendulum swinging with these expectations has been happening all year long. We came into the year pricing in basically 6 or 7 rate cuts throughout the entire year. Then, once we started to see some hot inflation data, some higher than expected CPI prints, well, those expectations went from 6 to 7 rate cuts to 0, and even in some cases, pricing in another rate hike. Then we started to see the data come back into more of a normal balance. We started to see those those rate cut expectations starting to move back into a little bit of a normal area. And honestly, it's been really fun to trade that, especially with TLT, TMF, and TBT, which we have had great success with this year. But those are things that we have to be aware of. Now, as we start to get that balance with those rate cut expectations, I think this market has some reason to kind of chop around before it makes that next move up. But what I want you guys to realize and really take away from these videos, because we are going to be doing these about 4 times a week, Monday through Thursday, is that in order to have success in the market, whether you're an investor, a trader, you have to understand the big picture. If you think that there's going to be some sort of cookie cutter setup or indicator or some algorithm that you're going to follow, that people say there's one algorithm that runs the market, yeah, right, okay. You're not going to have success. Information is the edge, guys. And again, we prove that every single day. And I want you guys to kind of take that away from these videos and say, okay, there's this type of information out there in the market. How does this information then tell us what the highest probability move is next, or give us that understanding of where the market actually is because of where the money is going to flow next? Right now, I think it's time for a little bit of balance, especially in the bond market and also in the equity market, as we see here. So guys, that's going to wrap it up for this one. If you did enjoy this video, make sure you guys drop a like down below. Help me get these videos back out going again. Let everybody know that we're doing these daily market recap videos. I'll see you in the next one. It's going to be on Monday. Today's Thursday. We're not going to be posting a video on Friday. Other than that, guys, see you in the next one. Peace.